Marco Kolanovic, JPMorgan. By the way, he's with us tomorrow. Been trying to get that guy on for a long time, and he's finally going to be with us tomorrow, and I cannot wait for that. He put it, there it is. He put a note out yesterday that said, quote, "We maintain that inflation will resolve on its own as distortions fade and likely drive a Fed pivot, while a stronger second half recovery in China should provide support for the global cycle." He's been more bullish than most. He's been steadfast. He hasn't wavered, and he continues to hold that position. What if he's right?
I think ultimately he can be right. I just think it's too early. Understand the way that these headline numbers work. They're a comp over last year. And the months that are about to roll off out of the CPI or PCE calculations were actually pretty tame inflation months. We're not really going to get to the point where the year over year feels better just on the data. But then there's this whole other layer, which is the sentiment. You could tell people till you're blue in the face, it's not a technical recession. There are still so many jobs. The earnings are holding up. There's no widespread distressed credit. People don't care if they feel as though things have changed and they're getting worse, and they feel as though they should be spending less or they should be laying off employees. If that's how people feel, then that's how it is. And all of the data in the world is not going to change sentiment. Sentiment has to shift. I don't see any sign that it's going to. They did a survey of CFOs. 50% of CFOs say that layoffs are in their plans for the next 12 months. It doesn't have to happen, but if enough people believe that's what's going to happen, then that's where we are.
So even if, let's say Kolanovic is right and inflation resolves on its own, those are the words that he uses. That may be true, but it's going to take a while, and the Fed's not going to wait around to see if in fact that happens. They're going to tighten, and then they're going to tighten, and then they may wait and see around if it resolves itself. That's an issue for things like tech, which has been beaten up lately. Dan Niles on Tech Check last hour, quote, "This is going to be a long, punishing journey," which is the reason why he's been more negative tech than most.
Rates are up. Long duration assets underperform.
Does that change anytime soon?
No, I don't think so, because what you just said, inflation is everywhere, and it's going to be persistent.
But then why
get a core PCE
why have those stocks been going up? Well, inflation, rates are up. Inflation is everywhere. The Fed's hiking.
We got oversold, and the data wasn't horrible in terms of the economic situation, right? And people did think that the Fed pivoted for whatever reason. Again, I didn't believe it, but these are all these things. Plus, you're down a lot. Everybody was off sides, too, right? And so, so we had a bounce. We're going to be choppy, though, because the fundamentals at the end of the day matter. And inflation is part of the fundamental story. Well, I don't think it's gloom and doom everywhere. That's the problem right now. And you're going to get a core PCE number on Friday. Even if it comes in at 4.7, which is the expectations, versus 4.8 last month, that's still darn high. 2% is what they want to see, and that's going to take a very long time to see that number come down. And so I think we're in this slog for a while. That's why I say it's choppy.